Page 29, underwriting, similar to pricing. We got to make sure that we know what's going on. So do we have a well-defined roadmap for the criteria? I'll give you something super simple that many probably haven't thought about that comes up from time to time. Let's drop down to letter D, middle of page 29. Let's talk about debts and deferred debts, and then debt to income just below that. So within your underwriting guidelines, think about your in-house loans, not secondary markets. They usually got this covered. Your in-house loan. What happens if let's say Amy and I are lenders in our organization? Okay, and we'll throw Kyla in there too. We're going to use three of us. So we all work for the Bankers Compliance Bank, right? And so I get interviewed by an examiner who says, all right, I'm looking at this loan file and there's some deferred debts on the credit report. Jared, how do you handle that? And let's say that our Bankers Compliance Bank doesn't have anything written out on how to handle deferred debts. And I say, well, I kind of just do $50, just $50 for if there's a deferred payment, I'll just throw $50 in there for the debt to income ratio. Okay. Then the examiner goes and interviews Amy, and Amy says, well, I usually do 1% of the outstanding principal balance. Okay. So now I'm doing a flat number. Amy's doing a 1% of the principal balance. We're all on the same team. Now the examiner goes and interviews Kyla. Kyla says, well, if it's deferred, I don't really see that as a debt that they're having to pay for right now. And so Kyla says, I don't count it. Okay, so now we have three different individuals all on the same team, representing the same bank, handling something differently. Now, if we're serving the same type of person, white males all day long, not going to have a problem. But that's not what you serve. And that would get you in trouble too, right? That'd be a real big red flag. We're going to have people that are of a protected class or a prohibited basis characteristic that come to the table. And when I serve the person that's a prohibited basis characteristic, or Amy does, and they get compared to what Kyla does, and not including the payment, if Kyla has a white male and Amy and I are helping out somebody on a prohibited basis factor standpoint, Kyla's going to treat that white male slightly better than what Amy or I do with the prohibited basis customer. That's a problem. We're not doing it on purpose. We're making it up, right? Well, because we're making it up but don't have a roadmap, it's created a problem within our organization from a fair lending standpoint. That's just one example. Obviously, there could be others. What's your roadmap? Let's go to page 30.